Okay, so let's have a look at what we've got and what we might expect today. But I'm then kind of expecting it to remain difficult and choppy for a while. So on the basis that if this A wave is done, we need to clear 2800 to prove that, and then we should be in this B up, which should work its way gradually up to the 2890 area, and then I think we come down again. So we're going to get similar to what we saw here, but I'm looking for a lower low for this too, then the 3, 4, 5. But same strategy. You know, the two things I'm considering is, was this the top of the three? And we have to give that some consideration at this point in time. And what's going to tell us is where we get to here and the structure of it, and then this next move down, what happens? Does it hold 2640? If it doesn't, then you've got to start to favour the idea that we've seen a very significant top in the markets. So as I said with things like EM last night and one or two other things, as we come back up, I'm going to be going largely to cash, wait and see what happens down here, and then be rather selective and more nimble with the rest of this move up. You know, if it gives us this third wave, then all well and good, but even then you're going to get a very deep pullback in the 4 because it's a diagonal pattern. The idea of an impulse is pretty much gone, you know, unless you're thinking of 1, 2, 1, 2, but I think that's highly, highly unlikely. So that's what I've got at the moment in the ES. Now, yesterday, just to zoom out and kind of show you what we're suffering from at the moment, we're in this, okay? And it's just chop until it either drops down and gives us that last low and this A is not in. 2695 would be the ideal target for that, or it takes this out and then 2800. So you've got to take this peak out here, followed by 2800 to prove that we're in this B wave in the ES. So again, coming down and looking at that here, if giving this the benefit of the doubt as the A in, I can get an A, B, and then we're going to chop all the way up here to around the 2820 or slightly higher in what looks to me at best as an unfolding diagonal move, which is that 15-minute chart that I put out this morning. So let me just expand that up. This is what that's going to look like. And by the way, it's far from proven. The first thing we're going to have to do is take out this B wave high here, but I can count an A, B, C for an A wave of this larger A up, B back, and then you have an ABC1, ABC2, and this would be the beginning of the 3. So you're going to get an A, B, C. So it's going to remain treacherous, okay? And the ranges are such that you can trade with much smaller stakes, even on your day trades intraday anyway. We're going to have to give it a little more room than we would normally on each entry, but that's compensated for by the smaller stakes, which in turn the profit reward is compensated for by the increased volatility. So just, you know, pick your battles, and if you get one decent trade in for 10 or so points in the day, protect those profits until we start to get some more clarity and come out of these never-ending diagonal parts of the pattern. But at the moment, while we're below 28,785 and 2800, all of this chop and gawp and yuck since the low last Thursday can be a fourth wave, and we still get the fifth of this A wave down. So all of that to say, the pattern's uncertain, the price action's volatile and choppy. It's time to just be cautious. In the meantime, day trading wise, I've adjusted the line slightly. We did break out from the initial overnight high, and has given us 5 or 6 points as a scalp up for any of you that were trading first thing this morning pre-market. I wouldn't do anything now until after the open, but at the moment it's looking relatively strong. The first thing we'd need to clear is yesterday's high up at 27.79, and if we can do that, then we may get a run up towards 2800 from there, and that'll be the tell then as to whether we're going to get that last low before a bigger rebound or not.